Welcome everyone. Thank you, Juan Pablo. Thank you, Michaela, for those opening remarks. We're joined today by Public Credit Director Cesar Arias. Thanks a lot for your time join us today. What we're going to do is just have a quick opening statement with the Public Credit Director, and then we'll follow up with a session of questions. So without further ado, let me pass it over to Mr. Arias. Again, thanks for your time.
Thank you very much. Give me 1 second, I put my presentation on. Well, on behalf of the Ministry of Finance of Colombia, we want to thank the invitation of the Colombia Stock Exchange, also the Citibank for hosting us, and particularly thanks to everybody, all the investors and opinion makers that are connected through Zoom for this opportunity to discuss a presentation that we have prepared for you, and we have called it Colombia Macroeconomic Strengths and Investment Opportunities. So the presentation has 2 parts. In the first one, we realized that it is very important to convey to investors that in times of volatility, like the ones that we are experiencing, Colombia remains a country that has very strong anchors for macroeconomic stability. And in the second part, we're going to be discussing some investment opportunities in the post-COVID era. So without further preliminary words, let's get to the presentation. The first anchor that you have when you look at Colombia from an investment perspective is that Colombia is a very dynamic and resilient growth economy. This chart on the left shows you that clearly over the last 24 months, Colombia has been outperforming all other Latin American investment grade peers in the region. Colombia is growing faster than Peru, Chile, Brazil, Uruguay, and Mexico. In the blue line, you see the performance in 2019. But what is also interesting is to see the orange bar, which is the performance in the first quarter of 2020. And you see that Colombia with Chile were the only ones that were in green in the first quarter. That already takes into account 2 to 3 weeks of pandemic, and it outperforms all other economies like Peru, Uruguay, and Mexico that are actually already in a contraction when the crisis hit. The second thing that I like to show is this heat map on the left. This heat map on the left divides the economy by sector. We have 12 sectors in the economy. And with the information that we have for the first quarter, we can report that 8 of the 12 economic sectors are still growing positively in the first 3 months of this year. Particularly, we see how agriculture is an important sector in green. It grew almost 7% in real terms. Public administration grew 3.4% in real terms. And we have 4 sectors that are growing negatively: construction, mining, entertainment, and slightly manufacturing. But as you see, these sectors have a lower share of GDP in the economy. On the right-hand side, we also see how Colombia is adjusting. The negative news is that we were driving a very investment-led recovery, which is that gray line on the right-hand side. But unfortunately, it was investment-related sectors that actually took the first hit during the pandemic, and it was only cushioned by the performance of consumption. The third thing that I would like to say is that Colombia was a leader in Latin America in imposing very strict measures, very strict lockdowns during the early part of the pandemic, but it was also a leader in the region in starting the gradual reopening of the economy. On the left-hand side, you have the dates, different periods of the pandemic, and the level of openness of the production capacity of the economy. And you saw that even during the most stringent times, the production capacity of the economy was open at something between 65 and 70%. And gradually towards mid-June, we're recovering, at least in production capacity, at 90%. So we're expecting to see the economy revamping its full capacity in the second half of 2020. One of my favorite indicators, because it's a real-time indicator, is the level of demand for energy. And this indicator really doesn't lie. What you see there is during the early months of January, February, we had very similar levels of energy demand that we had last year. This line shows the inter-year growth. And you saw how during the most strict time of the lockdown, energy demand contracted by 34%. But you see that as the lockdown measures ease, we're gradually recovering this energy demand. Already in early May, we had energy demand growing close to 8%. And as you see in the chart, today we have energy demand growing year on year at a level of 6%. Another thing that facilitates not only the dynamism of growth, but the resilience of growth is actually Colombia's economy flexible exchange rate. And we have two pieces of evidence to show you. The first one is the chart on the left. One of the main vulnerabilities of the Colombian economy is the current account deficit. And what you see there is that this tool of the flexible exchange rate has helped to undertake a gradual and orderly adjustment of the current account deficit. It is impressive how we moved from having a current account deficit of $3.5 billion towards the end of last year to having a current account deficit of $2.7 billion in the first quarter of 2020. And really, the maintenance of macroeconomics worked very well in Colombia. What you had is basically a contraction in primary income, another way of saying profit repatriation. Companies have this automatic stabilizer that make them to repatriate less capital during contractions. Imports started to contract, and that's why you see a narrower trade deficit. And then you see that steel services and transfers perform poorly, not surprisingly. In services, what you have a lot is tourism. And in transfers, although remittances perform relatively well, we have some one-off operations in the insurance industry that actually turned that to negative. But you see how in an orderly fashion, the economy is self-adjusting to a lower equilibrium of a lower current account deficit. One of my favorite charts is the chart on the right. Actually, I have drawn this chart for several other countries. What happens is that Colombia has only had one recession in 40 years. We will probably have a second recession in 2020 in a period of 40 years. But what you have there is how the Colombian economy absorbs shocks and how it recovers. And this brings out the typical discussion between a U-shape or a V-shape recovery. So what you see there is that the only recession that Colombia has had in 40 years, in the year 1999, what we had, it was a very nicely shaped V recovery. We took 4 quarters to go down and touch bottom, and we have the same 4 quarters to come back. Even in the 3rd quarter, we already recovered. And this was the shape of the recovery of the 1999 recession. And then you see, for example, the global financial crisis. In the global financial crisis, which is the red line, you see that we actually didn't fall into recession, but the recovery was very L-shaped. So we fell during 4 quarters and then sort of stagnated for 3 quarters and finally came back in the 4th quarter. And the other 2 lines that you have there is the purple and the green line are basically oil shocks. And you see that the oil shocks are very shallow and the economy actually adjusts very well thanks to this flexible exchange rate tool that we have. So we still have a lot of uncertainty on how it's going to be the shape of the recovery this time around, but if the past is a good indication of the future, we should be able to recover more like the V shape of the 1999 rather than the L shape of the 2009. The second anchor is that Colombia traditionally is very conservative and very prudent in the response to shocks. And here, what I want to show is that we have designed an emergency response package that is bold enough to tackle the challenges that we have, but that is prudent enough to prevent that this fiscal response is actually jeopardizing either macroeconomic stability or fiscal sustainability. And the way we do it is the following. When you add it up, the fiscal response package is around 11% of GDP. But when you see the composition, you will see that only a third of that package is actually a fiscal injection. As you see there in the chart on the left, we have designed a rapid response package of 3% of GDP, 3.1% of GDP. This is actual cash that comes to the treasury, to the economy. And it's basically disbursed in thirds, 1/3 for health, sanitary emergency, 1/3 for vulnerable populations. We have different levels of vulnerable populations, young, elderly, kids, and informals. And we have 1/3 of an employment protection scheme that we have designed during this emergency. Another 3% is actually liquidity provision, but it doesn't have a fiscal cost in the sense that this liquidity provision is led by the central bank, and they have injected this liquidity into the economy through repo facilities, through bond purchases, and also to the cut of reserve requirements. And finally, we have another component of the rapid response package, which is credit guarantees. And credit guarantees is a very interesting mechanism because although you don't disburse money upfront, because you're just guaranteeing credit through the financial system, it is true that you have a contingent liability dependent on the credit quality of these credits. So when you add up the 3.1, the 3%, and the 4.8%, we get to an 11% emergency response package, which is generally smaller than in other countries, but every country counts it differently. But what we want to convey here is that we are tackling this problem through 3 different facilities, one that is cash, another that is maintaining the liquidity and the well-functioning of capital markets, and finally, through credit guarantees to reduce these asymmetries of information that we're having in the credit market. That is that although there is liquidity, there is very little appetite for risk. This has increased our financing needs. Our financing needs, we started with a deficit target of 2.2% of GDP early in the year. And in the latest meetings with the Independent Fiscal Council, that level of the deficit has been widened to levels around 6.1%, 6.1%. And what we want to tell you is that from the Treasury perspective, that is the main part of our job, we have applied a principle of diversification of financing sources. And on the left, you see that 36% of those financing needs have been covered through domestic bond issuance, another 20% through multilateral lending, 16% through international bonds, 16% to public sector savings. We were able to draw down on surplus funds that we had in the public sector, for example, the Oil Stabilization Fund, the Regional Pension Fund, and another 12% through the issuance of solidarity bonds with the cuts in reserve requirements that the central bank applied to commercial banks. And this strategy of diversification has had a very positive response in the market. Approximately 3 or 4 weeks ago, we issued international bonds in global markets, and we were able to do 2 things. First, as you see in the chart on the right, we were able to place these bonds at the longest tenors possible. So we sort of differentiated with respect to other sovereigns that prefer the tenors of 5 years and 10 years. We actually disproportionately rely on funding at the 31-year sector, and we were able to lock in the lowest coupon in Colombian history at 31 years, which is the coupon of 4.2 that you see in that slide on the right. And we compare that coupon with all the coupons that we have issued at the 30-year, and it's significant to see that our coupons have been coming down from 7.5% to 4.2%. But this positive response from the market has been also reflected in our local assets. When you see copy performance, our Colombian peso, you will see that, of course, during March is widened, is the red line, the dotted red line. But you see how Colombia, at the beginning, was performing very similar to Brazil, very similar to Mexico. And then, starting in mid-March, it outperforms Brazil, it outperforms Mexico, and it even outperforms Uruguay. Of course, this still trades wider than Chile and Peru, but you have to understand that Chile and Peru, of course, has 1 or 2 notches difference in terms of credit quality. On the right, you will see our coltes, our local currency bonds. The gray line, sorry, the black line is the yield curve pre-COVID, right there in January. And then you see how during the peak of the emergency in mid-March, the yield curve went up significantly. But the black line tells you that basically all the sell-off that we have in March has been fully recovered by early June. Of course, the curve has steepened, and it has steepened because of 2 things. One is the fact that the market hadn't anticipated the aggressive cuts by the central bank in the short end of the curve, and on the long end of the curve is reflecting the fiscal expansion and the discussions that we're having in terms of fiscal policy. The main scars that we're gonna have after all this process is a significant increase in the debt burden. We want to be very transparent about this. is a debt burden is basically gonna go up from 50% of GDP to something around 65, 66% of GDP in a matter of a year. This is very comparable with the IMF estimations. IMF estimates that all emerging markets on average are gonna increase its fiscal deficits by 4.5% of GDP, and those that are commodity exporters are gonna increase is debt to GDP, is fiscal deficit by 7%. And in terms of debt, the debt burdens of the emerging world are going to increase between 10 to 15% of GDPs. We are uncomfortable with that level because we have a parametric limit, more than a legal limit, is a parametric limit that tells us that when you hit that 60% of GDP threshold, you should start a very accelerated and determined step of reducing the debt burden. So when the information that we're having now, and we're recalibrating it, we're already forecasting that we can reduce the debt burden by 4 percentage points next year if we have a higher recovery, and also if we start consolidating the fiscal deficit towards and more normalized times after the pandemic. And the third anchor of macroeconomic stability is that Colombia has, unlike other countries in the region and in emerging markets, a very stable political landscape and a very strong institutional setting. I don't want to talk a lot about politics, but what I can tell you is that the single most important factor when the pandemic ends is going to be the capacity of governments to implement reforms, corrective reforms, through Congress and through its relationship with the judiciary. Here in this slide, what I have on the left side is the 6 economic bills that we tabled to Congress since we came to government in August 2018. We have submitted to Congress 6 economic bills, and all of them has been passed. And what you have there is the share of favorable versus unfavorable votes. And what I can tell you is that all of them has been passed at least with a 2/3 majority, both in the plenary of the House and the plenary of the Senate. In some cases, it's even more than 2/3. And these laws, as you will see in the chart, are the national budget of 2019, the national budget of 2020, a fiscal reform in 2018, a second fiscal reform, tax reform in 2019, the National Development Plan, and the reform, which was a constitutional reform to the royalty system. So what I want to convey is that Colombia, different to other countries, has a broader consensus on the maintenance of macroeconomic stability, and that is reflected on incremental reforms in Congress. I agree with you. Most of these reforms are not structural, foundational, but they have taken a very pragmatic and incremental approach to improving particular elements of our policy making. And the second thing that is encouraging is that even at the early part of the stage of this pandemic, the president undertook a very tactical cabinet reshuffle that broadened our representation of the government coalition in Congress from 50% to 60%. And this came out basically with the inclusion in the government coalition of this radical change, Cambio Radical party that was previously independent and that now is part of the government coalition. And is so part of the government coalition that actually the Ministry of Health is perceived to be as the representation of this party. So when this emergency abates, again, it's going to be very important to evaluate as an investor the capacity of the political class, of the democratic institutions to deliver reforms and corrective measures. And we think that Colombia is well positioned to take advantage of its long-standing tradition of incremental change of economic reforms. Let's talk about the second part of the presentation, which is the investment opportunities post-COVID. I have identified three main areas of opportunity for foreign and domestic investors. The first one is fixed income markets. Colombia has one of the deepest and most liquid government debt markets in emerging markets. As you see there, our local currency bond markets are around 30% of GDP. We consider that this is an optimal size. It's not as small as in Indonesia, Turkey, or Russia, that has domestic markets of around between 10 and 20%. But it's not over-exaggerated with countries that have a very, very heavy load of debt, like Hungary, South Africa, and Brazil. We are more in the league of the premium emerging markets in terms of bonds. Mexico has 31% of GDP, Thailand 31% of GDP, and India a similar percentage. We have two curves that are liquid there. The most liquid one is the one on the left. You see on the blue bars our benchmarks. These are benchmarks of around, I would say, $10 billion on average in fixed income. And it's a curve that we're in the process of even extended from 15 years to 30 years. But we have also working on the development and standardization of our inflation linker curve that, as you see on the right side, is less homogeneous, but we're working to take it to the level that we have in the fixed income, in the fixed rate level. There is a feature that makes our domestic bond market more stable than others, and is that we have no dominant players in the market. As you see in the left-hand side of the slide, we have a very diverse distribution of holdings. Pension funds have 30% of the market, foreign funds have 23% of the market, commercial banks 17%, public sector trust 14%, and other areas in the financial sector 10%. And this facilitates the trading during the good time, but especially during the bad times. And we have seen how the Colombian market has performed really well even during March. It is easy to get in the Colombian market, but it's easy also to get out of the Colombian market. We don't have capital controls. We have a very business-friendly approach to these flows. And we basically, even within these foreign funds of 20%, we have a very diverse distribution of holdings across the world. You will see, for example, that look what is happening in continental Europe. 2 years ago, continental Europe accounted for 40% of our holdings of Colombian TES. With the Colombian accession as a full member of the OECD, those holdings have increased to almost 46% of GDP. And we have been working on increasing the holdings in South America, increasing the holdings in Canada, as you see there, and maintaining a good participation in Asia. On the left-hand side, you will see that our returns in the test curve. You have seen that, not surprisingly, despite all the volatility between the short part of the curve and the middle part of the curve, the returns have been in the double digits territory. And of course, given the steepening, the returns have been lower in the longer part of the curve, but nonetheless positive. And one of my favorite charts is also the chart on the right, because it's not only, if we have had this talk 2 or 3 years ago, the dominance of the government in the domestic bond market is significant, still is, But what you're seeing now, and probably the CEO of the stock exchange can talk about this, is that there are more and more non-government issuers emerging. We have on the right-hand side the level of issuance and the new participants in Colombian bond markets in local currency. And over there you see securitizations, you see domestic banks, you see corporates, and you also see subnationals, for example, the District of Bogota. The second thing that I see as an opportunity is that one of our main achievements as a government is the capacity to attract foreign direct investment. This is a very important chart. In 2019, foreign direct investment grew in nominal terms 25%. This means $3.5 billion in additional FDI came into Colombia last year. And what is more important is that non-oil or non-mining FDI is growing at double the rate of oil mining FDI. And when you compare Colombia across emerging markets in investment grade territory, we outperform Peru, Thailand, Hungary, Philippines, India. And in annualized way, we were able to attract more than 4% of GDP in foreign direct investment. And down there, you will see the sectors that have been benefiting from this foreign direct investment push. And you see things like finance and business, you see oil, you see retail, restaurants and hotels, you see manufacturing, transportation, construction. And you will think that this was an issue of 2019, but thankfully we got the data from the first quarter of 2020. And in the first quarter of 2020, you see that despite the slowdown from the pandemic, foreign direct investment grew 6% year on year. And the growth of other sectors was 22% and more than offset the fall in oil and mining FDI. This is very important. We just gonna give two examples of two sectors that were very dynamic in terms of FDI. The first one was electricity, gas, and water. So utilities is a sector that is performing really well in the Colombian economy. And what is called community social services. As we will see in the next slide, you will see that the performance of health, for example, of education, of some of those services is performing really well. This is a very interesting slide. What I wanted to bring here is the landmark investment transactions during the last 18 months in Colombia. And I'm just gonna go through some of them in the interest of time. For example, SoftBank invested in Rappi, which is in the technology sector. This is a Japanese company and it is planned to invest $1 billion. We have, for example, another example of these issues of health. You have United Health investing in Banmédica, an American company coming to Colombia for $342 million. We have a Peruvian company, Primax, buying a significant part of the gas stations in the main cities and in Colombia for $200 million. And you will see there, for example, China Harboring, investing in Metro Bogota, in the first line of the metro that we're gonna have in Colombia for an early investment of $260 million. So you will see there that it is diversifying not only in the sectors, technologies, utilities, health, infrastructure, but also in terms of the investors, the nationalities of these investors. You have there North American, Europeans, Asians, and Latin American counterparts. Finally, one sector that I would think is going to be called to be the most important one in the recovery of the Colombian economy is infrastructure. What I have there in front of you is the Infrascope ranking for Latin America and the Caribbean. You will see that Colombia ranked first in 2017, and now ranks second in the latest update that the Intelligence Economy Unit did of this ranking. This is a sample of almost 20 countries. And there are a couple of strengths that our infrastructure frame will have. The first one is the legal framework. The legal framework, I'm not gonna go into the details, but I can tell you that we have a standardized contract for concessions, especially toll roads, that we have designed a Chapter 11 for infrastructure in Colombia. This is probably the first Chapter 11 that we have in Latin America, and it brought about after the scandals that you have in other jurisdictions with the companies like Odebrecht. So now it is clear and certain in Colombia what happens when, for example, corruption hits a consortium and you have to orderly dissolve that consortium and rebid it. We have significant innovations in terms of markets. Colombia has 3 debt infrastructure funds with counterparts like Ashmore, CAF, BlackRock, Credit Corp, and we have 1 equity infrastructure fund that is being funded through CDPQ, and to my understanding, there is another one that is closely to be announced soon. We have started to introduce features like the mini-perm, securitizations, a standalone project finance. We have issue bonds in inflation linkers and linked to dollars, and we're working on providing facilities to provide funding in local currency. Finally, I think what is more important is that we have 2 markets in infrastructure. We have a primary market. Out of 30 concessions, we have already made financial closings for sort of half of them, financial closings for $7.8 billion, but we have already $7 billion still to be closed. So that's what we call the primary market of infrastructure. As a whole, this is something like 4.5% of GDP. You will see on the right that the financing sources for these projects have diversified significantly. In 2016, local commercial banks accounted for 50% of the financing. Today, local commercial banks only account for 26% of the financing, and you have, for example, 35% from international banks, bonds, debt funds, and equity funds. And this is the last slide, but I think it's very important, because what you have emerging in Colombia is a secondary market of infrastructure. All these concessions that you have there on the left side, a dozen of infrastructure concessions that have achieved more than 50% of execution, are now being sold into the secondary markets. We already completed a transaction there in the second one, Cartagena Barranquilla, and we're expecting to see more movement in this pipeline of transactions that are abating construction risk and that could be put and diversifying the market. So the secondary market for infrastructure in Colombia measures almost $5 billion, close to 1.5% of GDP. And finally, we're launching with the Minister of Transportation what is called the 5th generation of infrastructure products. 2 things to say there, and we can talk more in the Q&A session. The first one is the size. We're talking about $5 billion, another 1.6% of GDP. The second is that we're moving from traditionally infrastructure in Colombia meant toll roads. Now we're talking about airports, river navigation, and rail. The projects are listed there, and these we think are important opportunities that there is no more important sector than infrastructure in the recovery stage of the Colombian economy. So sorry I overstepped a little bit of time, but I wanted to give you the best possible color, Esteban. So I turn it over to you for moderation. Thank you.
No worries at all. Thank you very much for your time with that presentation. We have like 10 minutes, so I've received several questions. I'm gonna lump them up in topics, and we can go that way since we're not that ample on time. some topics have come up in the past couple of weeks, and we are soon to receive from the Ministry of Finance the medium-term fiscal plan. So of course, we can't discuss that yet, hopefully soon. But in the meantime, we have news. The Fiscal Rule Committee last weekend approved suspending the fiscal rule. And we have several questions coming in on that topic. One is, are your deficit estimates changing a lot? And of course, we'll have more information in the medium-term plan, more due to revenues being lower, or is there a new fiscal package being planned that could potentially widen the deficit? That's one. And another question we'll ask on the fiscal rule is this new committee that is being proposed, which is the old committee turning into an oversight panel. Will they have oversight powers to actually control decisions, or will it just be an oversight panel giving commentary and guiding fiscal policy alone?
Thank you. I wanted to show you. I will say the two things to start. The first one is that I don't know if you're seeing my presentation, the slide, Esteban?
Not yet.
Not yet. But basically, I'm having troubles, technological trouble. But you see me and hear me.
Yes, perfectly.
Okay. So what I would say is two things. I'm trying to show you a slide, but look, the suspension and the use of escape clauses in fiscal rules is not only an issue affecting Colombia, is an issue that is being affecting all countries. I'm trying to show you a slide in which, as you know, the European Union activated a suspension of the fiscal deficits recently for all the EU members. The same thing has been recommended by the OECD. In the region, Peru, for example, has suspended the fiscal rule the same way as Colombia for 2020 and 2021. And we have other countries at the same level of ratings like Indonesia, India, Czech Republic, making use of these escape clauses. Unfortunately, my thing froze, but I'm glad that you still hear me. What is going to happen with the deficit? Look, what we know as of now is that we started from 2.2% of GDP and we moved to 6.1% of GDP. It is clearly not enough, the 6.1% of GDP, and that was the reason guiding the suspension of the fiscal rule. Now, as you mentioned, I cannot tell you exactly the number right now that we're going to have for 2020. In a week and a half, we're going to present the medium-term fiscal framework to the public opinion as is mandated by law. So in that fiscal framework, we're going to announce not only the deficit target for 2020, but also for 2021, 22, and the 10 years after. This is an exercise of 10 years of fiscal planning. What I can tell you is that we are learning more and more about this crisis. And what I can tell you is that in the first stage, where you are more worried is how much is going to be the size of the spending shock. And we more or less started with an estimation of something like 2% of GDP, and we will probably end something closer to 3% of GDP in terms of the cash needed to do extra spending in health, in vulnerable populations, in protection of employment. Once you have managed that spending shock, the second derivative of the shock is more difficult to quantify because it's going to be the revenue shortfall that you have due to the economic contraction. And in that sense, we started with a forecast of a revenue shortfall in taxation of 1% of GDP, and is looking that that level of the shortfall in revenues due to the economic contraction is probably going to be closer to 2% or a little bit more of GDP. Okay, so we're going to have a combined shock on spending of 3% of GDP, let's put it this way, and on revenues of 2% of GDP. And that's what we're trying to preventively finance through our different sources that we have achieved. On your latest question about the role of the committee, we want to convey the following. You can make use of the escape clauses. You can suspend the rule. This is completely legal. It's incorporated in the fiscal rule. But in the press release, that was the conclusion of that meeting between the fiscal rule committee and the government, there were, I would say, 3 conditionalities that were very strict. First conditionality, you have to announce in the medium-term fiscal framework the clear path for fiscal policy. Second conditionality, you have to do 2 types of policies to restore to the parameters of the fiscal rule in 2022. First, you have to rationalize spending, particularly subsidies policies that need to be better targeted and more efficient. And second, the country needs to increase its revenue income in order to preserve the long-term sustainability of public finances. And the third conditionality is that the press release says you have to include an article in the budget law that we will submit to Congress in July and will be approved in October, that gives force to this independent fiscal rule committee to play a role of overseer and to check the quarterly reports that by law the government will have to submit in order to follow up on the policies while the rule is suspended. So when you read the press release, you will see that it was purposely designed to incorporate this even in the budget law that we're going to submit to Congress later in the year.
Thank you. So we're running a little bit short on time, and this is a topic that I'm getting a bunch of questions on. So we have around 5 minutes for an answer, and it's on the topic of pensions. There's a couple of things going on. Of course, the possibility of a bill with withdrawals that came up last week, the bill that is going on in Congress right now about a move from the private system to the public system for a certain number of individuals, and finally pension reform, which has been a big pillar for or plan from the government, which is scheduled or was scheduled for this year. So on just a quick comment on the first 2 topics, and then on pension reform, is it still in the pipeline, and is the possibility of a tax reform gaining weight that could potentially postpone the pension reform in favor of a tax reform over the next year or so?
Thank you. In the interest of time, I'm going to try to be as quick as possible. The first one, on the potential use of pension money to be withdrawn by pensioners or contributors to spend during the pandemic, I think the President of the Republic cleared that debate. The President, Iván Duque, is opposed to that approach to fiscal policy. And I think that solved that debate last week. So all the options were studied through this process, but I think the President of the Republic has been very clear in saying that it is not the responsible thing to do to spend the savings of the pensioners and contributors today and create a problem tomorrow. I particularly subscribe to that same opinion of the President. Pension reform is in the pipeline. Yes. I think pension reform is not a problem of if, but when. Unfortunately, we have had to postpone it 2 times. The first one was last year at the end of the year, because the Constitutional Court asked us to repass the tax reform, and it is difficult to pass a tax and a pension reform at the same time. And in the first legislature of this year, we were also going to submit it, but the pandemic came, and actually Congress was not in service for several months early in the year. So what I will tell you is that it is a priority for the Ministry of Finance. It is a priority for the President, and we will get it to Congress when the time comes. It is a reform that looks to increase fiscal income? No, it is a reform that seeks to achieve 2 objectives. 1, increase coverage. Only 1 in 4 Colombians that are in retirement age have access to pensions, and that is unsustainable. And 2, there is a need to make more progressive the distribution of subsidies between the different incomes of the population. Today, it is very regressive. The largest part of the population is actually financing the subsidies of the richest part of the pensioners. So those 2 objectives have been publicly announced that are gonna be driving this pension reform. And in the issue of tax reform, I repeat again, it is an issue of when more than if, in the sense that we have to be careful, and the President has stated publicly that doing tax reforms in the middle of a pandemic is probably not the right approach to do it. But once the dust settles, I think that the country, and given what we discussed on the Fiscal Rule Committee, will have to start having that discussion.
Great. And let me just sneak in a quick question on support for the airline industry that has also been discussed recently. There was support at the beginning of the pandemic. Has that moved along?
Yes, I would say two things that are important on that topic. First, we're not helping particular companies, but we are gonna support a broad-based package for the industry, especially in the sense that this is a strategic sector for the reactivation of the economy. 2, it is very important to see that 2 of the main airlines have filed for bankruptcy proceedings in the United States. And this facilitates the role of the government, because it actually make very clear and very concrete that what comes out of these rulings gives you more certainty on the extent and the depth of the package that will be needed.
Understood. And with that, we'll start wrapping up our conversation. I want to thank you, Mr. Arias, for your time. Quite informative in a very relevant time. Thank you for joining us through this webcast. We're coming on from everywhere. Our next panel is oil and gas, led by our oil and gas analyst, Pedro Medeiros, out of Brazil. So we're joining you from all across the world. Everyone listening, thank you for your time as well. I hope you found this informative. If there's any further questions, either from me or Mr. Arias, we'll see how we can manage those. And sorry we couldn't get to all of them. Thanks a lot for your time. I wish you a wonderful day, and I hope you're all staying safe.
Thank you very much, and thank you for this opportunity to the Stock Exchange, to Citibank, and to this forum of Colombia Inside Out. I hope it was informative, and we're happy to respond any other questions that some of the investors have through other channels.
Thanks again.